What's up, guys? It is Sunday, January 29th. It's 9:30 a.m. and we got part 2 to our crypto newsletter catch up. We got Biden administration to unveil priorities for crypto research and development in coming months. So this goes my theory as far as the March, April-ish time frame for maybe a golden swan event, which will likely be, regulations coming out, framework, maybe a global one, but maybe something that is kind of floated out in the US. And that will be insanely bullish, and especially for US companies like Amazon, who some insiders found that Amazon NFT initiative coming soon. This is an exclusive. According to 4 sources familiar with the matter, they said that an NFT initiative is expected in the spring. So Amazon coming into the space is a big one for crypto for many different reasons, one source said. And the effort is still developing. April appears to have been penciled in for e-commerce giant to make its bold crypto ambitions public. Huge. So April right there. So a lot of things are lining up for that time frame. Then we have March is the ISO 222 migration. Then we had this. So Amazon comes to crypto, partners with Avax, and then announces an NFT initiative, but not confirmed with Avax. They are making moves. Think this can run to $28 in the next month or so. Chart looks great, but has to flip the $20 area. Currently, Avax is above 20 and is holding out support. So definitely in the cards for Avalanche. That was definitely huge news. And then you saw Amazon with that floating out that huge kind of entry announcement and into Web3 coming in April. Yeah, we could see a lead up to that for sure. Then that was the US debt clock. We covered that in the last video. Then we have top 100 BSC whales are hodling. These and XRPs right there. It's the third one. Then if we keep going, we got, same thing. And then notaries in Corda Next Gen architecture. Key concepts in Corda Next Gen: notarization and uniqueness check. So broadly speaking, notarization in Corda is formed of 2 parts. The first part is a flow protocol in which a client virtual node requesting notarization establishes a session with a notary virtual node, which then performs protocol specific validation. So notarization, authenticity, verifying that somebody did actually sign this is now going to be streamlined, right? And then you got the beautiful example, Alice, Bob, and Charlie. Alice and Bob, I had covered Velo earlier in the video, deep dive on Stellar earlier, and that was the example as well too. Usually when you see that verbiage, they're tied up with the inner circle. Multiple virtual nodes in a high availability world. Let's go down the life of notary. So it's a lot of technical stuff right here. But as you can see, Corda is really next level, next gen. They leveled up and they've been leveling up every year. Then we had this. So this was floated out and Ripple was tagged and I forget the country. I think it was Montenegro or something like that. I think there's another thing I have up here that will give us the full story on that. So for now, we're going to skip that, but I believe that is the case. Let me actually click. Yeah, Prime Minister of Montenegro, the president, and they're launching a digital currency pilot, CBDC pilot on Ripple. Boom, right there, another one. Krungthai Bank joins Contour's growing network as it prioritizes trade finance digitization. Contour, the global trade finance network, announced today that Thailand's Krungthai Bank is joining its expanding production network. Krungthai is one of Thailand's leading commercial banks that is supporting the country's growing status as a key export hub to the world. Thailand's export growth has remained strong due to the weaker baht. In 2021, exported a total of $294 billion worth of goods. Go down here. Digital developments in trade finance are crucial to supporting economic growth and unlocking more opportunities for industries and corporates to scale. Contour's decentralized network optimizes efficiency, speeds up turnaround times, provides greater transparency and security. Fully digital end-to-end letter of credit settlement processes. So digitizing trade finance, streamlining it via blockchain technology gives you all those benefits right there. Let's keep going. This is for the European central banks. Look at the dates. There we go. So we got January, uninterrupted testing, the 13th, the 16th, user testing plan completed, the 27th. Then we got pre-migration activities completed right before February starts. Contract legal adaptation, procedures, migration weekend dress rehearsal, March 5th. The February 3rd to the 5th. We're talking about a dress rehearsal. Let me get my suit because That could be an interesting weekend. I like that. I like the sound of that. Pre-migration day validation of CRDM configuration start on February 8th. MIB recommendation to go live the 10th. Interesting. February. Could get a little early pump. Then there's actually more. Oh, this is actually no. January 31st, 2023, complete the pre-migration activities on the production environment, are ready for go live. Go live for T2 service, first business day, March 20th. Boom. I'm excited, man. There's so many catalysts to come out in the next months. It's truly unreal. Are there tech solutions to the privacy and compliance trade-offs for CBDCs? I feel like me and Alan were chopping that up on the Zoom with quantum computing and everything. But users will likely demand cash-like privacy protections for central bank digital currencies, which may be thwarted by regulations. However, new technology solutions may enable high degrees of privacy while complying with regulations. Retail CBDC has the potential to give authorities more information on users and their transactions, as well as facilitate detection, supervision, monitoring, law enforcement efforts. However, this opens the central bank to criticisms that CBDCs could be used as a surveillance tool, not only by itself, but by banks and payment service providers that are part of the CBDC ecosystem. Also, authorities could theoretically censor specific users and transactions, thereby impairing user freedoms. Storing and collecting personal and transaction information can ultimately lead to price discrimination for CBDC users and increase their cybersecurity risk. In the case of a hack, the leakage of personal information could lead, in the most extreme case, to financial losses that the central bank or its agent may be obliged to cover. What do we mean by privacy and how private are existing digital payment rails? Existing digital payment rails do not have a high degree of privacy and are growing in market share. Know your customer measures are necessary to open bank accounts and ultimately to conduct transactions. That confidential KYC and transaction data is shared with intermediaries such as banks, credit card companies that are involved in the transaction process. We go down here. Let's see. New technological approaches for balancing payment privacy and regulatory compliance. We got Gross et al. Have proposed a CBDC system that enables cash-like private CBDC transactions up to specific monetary limits. If these limits are reached, transactions above that limit have smaller, lower degrees of privacy as existing digital payment platforms. Limits can be specified in terms of transaction size, holdings, and/or turnover. The system works best with the availability of a unique digital ID available to all users, but such a digital ID is not a requirement. High privacy guarantees and compliance with limits are ensured via the use of cryptographic zero-knowledge proofs. Horizon, I believe, is a coin that focuses on privacy. Then you have Chom and Moser have proposed a CBDC based on blind signatures. The Bank for International Settlement Innovation Hub has launched Project Turbulent, which will build and test this eCash 2.0 platform. Then CBDC hardware solutions that take the form of a card or a mobile app wallet on which prepaid values are stored locally also opens the possibility of complete anonymity. Such wallets could conceivably be as anonymous and private as physical cash, although the central bank may require identification to enforce a one wallet per person holding policy and or transaction size limits to mitigate the financial integrity risk. And they've been testing that for the CBDC platform in Ghana. The point is, as noted in the 2021 paper, the degree of data privacy to choose for a CBDC is not a technological question. Technologically, all degrees of privacy can be reached. It's rather a political and policy question. With retail CBDC launches and pilots attracting underwhelming user interest, to put it mildly, it is now time to consider more cash-like privacy-focused CBDC solutions. CBDC can only become successful if it addresses relevant user needs and has sufficient trust from society. Truth right there. So let's go. European Central Bank as former Ripple employee also worked with US Fed on digital assets, CBDCs, stablecoins, and FedNow services. So here's a paper from December 2022. You got Jess Chang, partner Wilson Sonsini Goodrich in Rosati's New York office. She was formerly senior counsel at the Federal Reserve Board of Governors, Federal Reserve Payment Systems Services, including the FedNow service. Prior to that, she was the deputy general counsel at Ripple. Like, come on, the ties are too deep. So there we go. Then we got FSAB voting on fair market value and accounting digital assets, October 2022. Let's hear this.
Invitation to comment, indicating that that should be something that could be operational. And I'm comfortable with that approach for question one.
Thanks, Marcia. Gary?
We've heard from investors that, they're looking through, they want transparency through disclosure. And the only way to get to that is through fair value. I'm looking at a chart for Bitcoin over the last, year and 3/4. It's ranged from 20,000 to 60,000 back to 19,096. So the only way to get any kind of real information on the holding of Bitcoin or Ethereum is through fair value. And I think that's the solution.
Thanks, Gary. So,
Invitation to comment.
So you can see that they're on their Zoom calls. They're at the round table. They're having meetings. They're discussing, hey, how are we gonna, account for all this stuff? We got the FASB talking about how they're gonna do it. Love it. Then we got Filecoin back on top 10 purchase tokens among 500 biggest BSC whales in the last 24 hours. We got to keep an eye on Filecoin. We did convert in chain, but if we see Filecoin starting to go, we might have to put a little back in from something else that might be underperforming against Filecoin. So we'll be watching that. There we go. We've already gone through this. Then we got Bitcoin eyes 25,000 as Bitcoin price nears a best weekly close in 5 months. Man, we really nailed the melt up. Nobody was saying it. Everybody was expecting 50% down middle of December, end of December, even the first week of January. And we had said, guys, get ready. You don't want to miss this move. Urgent update, 2 to 3 weeks time frame. Don't make me pull up the highlight reel again. I'm not gonna, but it's in the bio if you want to check it out. And we really we're seeing the best weekly close in 5 months. And this was released 2 hours ago, and Bitcoin is already hitting new all-time highs for the year. So it's likely going to be the case. And it's just crazy how spot on we've been past 6 months, 9 months, basically 12 months now. And it's fun when you got the market really kind of by the hand. It's fun, and you can really kind of feel empowered and control to make substantial moves and execute and really grow your portfolio, especially when the market's down like that, or right now, even still. You can accumulate a lot of the quantity of the coins that you want to hold by playing it right. Then when the USD value goes up, you make X amount more. It's really fun. So come join the Discord and check out that chat. The link will be in the bio there. Yep, we already went over that. Then we got South Korea to deploy cryptocurrency tracking system in 2023. The virtual currency tracking system will be used to monitor transaction history, extract information related to transactions, check the source of funds before and after remittance. The Ministry of Justice of South Korea announced plans to introduce a crypto tracking system to counter money laundering initiatives and recover funds linked to criminal activities. Virtual currency tracking system would be used to monitor transaction history, extract information related to transactions, and check the source of funds before and after remittance. So yeah, they're gonna have a digital eye on these things. While the system is slated to be deployed in the first half of 2023, the South Korean ministry shared plans to develop an independent tracking analysis system in the second half of this year. A rough translation of the ministry statement reads, in response to the sophistication of crime, we will improve the forensic infrastructure. We will build a criminal justice system that meets international standards, global standards. There we go. All right, let's see it. Crypto bank Custodia denied membership in U.S. Federal Reserve System. So that's likely as a result of the White House coming out saying that it would be a great mistake to let crypto get embedded in the traditional financial system. We saw that this come out the same day. They got denied, and it was inconsistent. They were inconsistent with the required factors under the law. Supposedly, the firm's novel business model and proposed focus on crypto assets presents significant safety and soundness risks. Custodia offered a safe, federally regulated, solvent alternative to the reckless speculators and grifters of crypto that penetrated the U.S. banking system with disastrous results for some banks. So we're seeing that happen. Then we got this. We got overlapping global crises have hit small states hard in recent years. Policies that target climate change, resilience, economic diversification, and government efficiency could help small states improve their long-term growth prospects. It's from the World Bank. And it's all the same narrative, all the same verbiage. I just don't see how. I mean, they're just trying to push it on the population, but I just don't get it in a sense of how would that climate change resilience help all these things. It's just such a ploy to implement the fourth industrial revolution technologies. Hey, we see what's going on. We're just going to ride the coattails up. FSOC, Financial Stability Oversight Council, report on digital asset financial stability risks and regulations here. it talks about 3 areas: capital, financial exposures via interconnections with the crypto asset ecosystem. Let's see if there's anything. Regulation of stablecoin issuers, reserve assets, banks, credit unions, development of international crypto asset capital and liquidity standards for banks. Page 77. Let's go to that real quick. Regulations relating to leverage. This might be a good one to look at, but it's 100 pages long, so we're not going to dive deep on that. I'm just going to go to page 77, pique my interest for a sec, and let's see. Additional sources of shocks. This discussion is not exhaustive since, as noted, shocks are inherently unpredictable. Several other sources of shocks are also conceivable. Macroeconomic or financial developments could alter the incentives of crypto asset investors. Shocks could arise in the traditional financial system, for example, related to assets held by a stablecoin issuer. Operational disruptions could arise due to interruptions at third-party service providers, especially when the provision of services is concentrated, or in the case of electricity or internet outages. Confusion by market participants could also lead to shocks. For example, if consumers realize that the products are not as regulated or insured as they had perceived or had been led to believe, or market participants reevaluate their views on whether certain crypto asset activities are perpetually outside of the regulatory parameter. Finally, different jurisdictions may take different approaches that can entail transition risks. For instance, the banning of mining by the Chinese government in 2018 appeared to put substantial downward pressure on crypto asset prices. So the development of international crypto asset capital liquidity standards for banks. The Basel Committee on Bank Supervision has proposed an approach to the prudential treatment of bank crypto asset exposures. This approach would include a system to classify crypto assets into groups with capital and liquidity requirements for each group that reflect their respective risks. The proposed approach is informed by 3 principles: same risk, same activity, same treatment, simplicity, and minimal standards that allow jurisdictions to impose more stringent requirements and be considered compliant with the BCBS standard. The proposed approach would generally apply to different standards to crypto assets under the different classifications. Under the proposed classification system, Group 1A would include tokenized traditional assets, such as an equity share that can be transferred via a blockchain, but that conveys the same legal rights as traditional ownership. Group 1B would include crypto assets with effective price stabilization mechanisms, such as some stablecoins. Failure to meet Group 1A or Group B classification conditions on an ongoing basis would result in a crypto asset being classified in Group 2. Group 1A specific classification conditions would include that the crypto asset is either a digital representation of traditional assets that uses cryptography, distributed ledger technology, or similar technology to record ownership, and poses no more credit or market risk than the traditional asset, including by providing the same legal rights as direct ownership with no need to first redeem or convert the crypto asset. Boom. Then we go down for Group B, and those are designed to be redeemable for a peg value. Relies on stabilization mechanism designed to minimize fluctuations in the crypto asset market's value relative to the peg value and enable similar risk management as for traditional assets. Includes sufficient information to verify ownership of the reserve assets. Passes the redemption risk test, sufficient reserve assets to allow redemption for the peg value at all times, and the basis risk test, the crypto asset holder can sell it for close to the peg value. Is issued by an entity that is supervised and regulated by a supervisor that applies prudential capital and liquidity requirements. So the BCBS considering this requirement as an alternative to the basis risk and redemption risk test, and does not reference other crypto assets or rely on protocols to change the crypto asset supply. Group 2A would include crypto assets that meet the hedging recognition criteria of being referenced by a regulated crypto asset product, being highly liquid, so important, and having sufficient price, trading volume, market cap data over the previous year. All of their crypto assets would be classified as Group 2B. Crypto assets that fail to meet the classification conditions would be subject to more stringent prudential standards. Group 2B crypto assets would also fail to meet the hedging recognition criteria would be subject to particularly stringent standards given the very high risk likely associated with such assets. If Group 2 exposures exceed 1% of Tier 1 capital, all Group 2 exposures would be treated as Group 2B. Yeah, tokenized assets going down here. So we're looking to finalize crypto asset standards by the end of 2022. Given the rapid evolution and volatile nature of the crypto asset market, they noted that it will continue to closely monitor developments during the consultation period. The standards that they're aiming to do are finalized around year-end 2022, may be tightened. Shortcomings in the consultation proposal are identified or new elements or risks emerge based on the overall assessment. The standards are not automatically effective in the US. Instead, the standards could become effective domestically by federal statute, or US regulators would need to implement the standards through the notice and comment process in order for them to apply to US banking organizations. The FDIC, FRB, and OCC will retain discretion to modify the standards to address the specific risks facing US banking organizations and the US financial system. Boom, there we go. Now to wrap it up for this part 2. You have request for information, digital asset research and development, noticed by the Science and Technology Policy Office. This document has a comment period that ends in 33 days on March 3rd, 2023. Interesting. Interested individuals and organizations. Okay, so basically what this is about, the federal government is developing a national digital asset research and development agenda. The White House Office of Science and Technology Policy, on behalf of the Fast Track Action Committee on Digital Asset Research and Development of the Subcommittee on Networking and Information Technology Research and Development of the National Science and Technology Council and the National Science Foundation and the NITRD, requests public comments to help identify priorities for research and development related to digital assets, including various underlying technologies such as blockchain, DLT, decentralized finance, smart contracts, related issues such as cybersecurity and privacy, and cryptographic foundations, quantum resistance, programmability, sustainability as they relate to digital assets. March 3rd, 2023. Mark it on your calendars. And then it goes over a bunch of other information here. It gives like kind of definitions. So the responsible innovation of digital assets could provide significant benefits for the American people. This RFI seeks input to shape a whole of government effort on research development related to digital assets and DLT. So it goes into terminology, CBDC, crypto, privacy enhancing technologies, digital assets, background. Digital assets are enabling a new way to move value through the online world, and their underlying technology is facilitating change across industries. Private sector companies are using DLT to synchronize databases with limited trust, enable new types of record keeping, build new infrastructures for managing digital identity, and provide novel financial services to consumers. In the public sector, the U.S. is exploring whether a CBDC could provide a trustworthy infrastructure to facilitate transactions in a highly digitized world. All these things going on. Let's see if there's anything else here. Not for the moment, not that I'm seeing. So I'm gonna, I'll end it off. So after this one, hundreds of millions of XRP moved in 2 massive chunks as XRP rises marginally. A lot of XRP are moving around here recently. I'm not sure why, but then we go into this. XDC, ICC strengthens UK, Europe digital trade. Our objective is to digitalize 60 to 80% of world trade by 2026. Huge, absolutely huge. Yeah, by 2026, digitalization of European trade. We all have committed to work together, move closer to remove legal barriers and harmonize our legal system so our companies can all trade more easily. It was formed in 1919. We're talking 100-year changes that are presenting the biggest opportunity for people that are aware of it, like us. And I'm going to keep it at that. So that's part 2 of the crypto newsletter of the day. I'm going to finish off part 3 and then get into the charts. We're already moving here. We're seeing XLM break a little bit higher. XRP is trying to break higher. Bitcoin, let's take a quick look at it so I can let you guys know the price. It's at 23,550 at the moment as we speak, and looks like it wants to head a little bit higher here and try to take out those highs and really hit new all-time highs for 2023. So interesting times. And it's good to spend it with you guys on this journey. We're at the finish line, that's for sure. So I'll see you on the other side. Come join the Discord, say what up. I'll say what up too. I'll see you in the next video.